Hello viewers, we'll be going over silver futures. In this video, we'll be going over my trade idea of the week and how I developed that trade idea. So let's start off with the technical analysis. On Friday, silver closed above 5.4%. On the 1-hour chart, we have now reached to positive MACD and we are nearing overbought RSI. As for the 4-hour chart, what we have here is we bounce right off the 50 moving average, this yellow line. We are nearing overbought RSI and we have seen a convergence in play for the 4-hour MACD. As for the daily chart, we have bounced right off the 9 moving average, this blue line. We still remain at overbought RSI. For my trade idea of the week, I'll be trading SLV, and my entry for a long position will be at $21.58. That is a range around here, fairly close to the 9-day moving average. And as for my sell target, that is around $23.29, and my stop loss for my long position is $20.96. On the other hand, if I were to take a short position, my entry will be $23.72. That is upper range. And my sell target will be $22.22, fairly close to where we are currently at right now. And my stop loss will be $24.40. So how did I develop these trade ideas? It all comes from the day-by-day probability model right here. And as we progress to the 5th day or a week of trading, we have a 40% chance for silver futures to climb higher between 0 to 4.7%, and on the extreme case to the upside, a 20% chance to climb between 4.7% to 9.5%. On the other hand, to the downside, we have a 40% chance for it to fall between 0 to negative 4.7%. So which one of these 7 models we should use as a reference? So let's check the line graph as our comparison. So the blue line is our current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and the trend below is the one that we found on the line graph above. This trend dates back to December 1st, 2008 to February 27, 2009. So let's begin comparing both of the trends. On the current trend, we have 1, 2, 3 points. And on the trend in question, we also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly same. So the model that we just examined was December 1st, 2008 to February 27, 2009. So we have 1 day out, that will be a Monday, and 2 days out will be a Tuesday, and so on. So we have 3 days out, 4 days out, 5 days out. So back then, silver futures was around up 2.3%. If we head back to the day-by-day probability model above, and that coincides with this standard deviation on the 5th day, a 40% chance to climb higher between 0 to 4.7%. So let's examine closer on the technical performance of each trend, on comparing the current trend with the trend in past that we just found. Back then, for a monthly high, it was 11% away from monthly high. Compare that to current trend, which is only 80 basis points from monthly high. Back then, it was up 27% from monthly low. Compared that to trend, right now is up 37%. Back then, it was down 6% from 10 simple moving average. On the other hand, it was up 5.6% on the current trend, and it was down 2.6% from 20-day moving average. Compare that to current trend, which is up 16%, and the 50-day moving average was up back then 8%, and with the current trend it was up 28%. So there are technical differences among the two trends. One is the monthly high and 10 and 20-day simple moving averages. So do keep that in mind. There are technical differences among the two trends. These models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.